Yes, perfect. All right, time for some candle signs. So first we went over the bird's eye view, which is market structure. Then we went over a little bit more zoomed in the middle, more zoomed in order flow. Then now it's time to focus on singular candles, which is called candle signs. The reason it's called candle signs is because we truly study the single one by one candles. What we are doing on a 4-hour time frame and above, so 4-hour, daily, weekly, and monthly time frame, we focus on the singular candle, so one candle at a time, and we study the candle, how it moves, how it behaves. That's exactly what we will go over right here. So what we are doing with candle signs as well is we are guiding ourselves to the details about high probability price action. So when candle signs, order flow, and market structure are all in agreement, that is exactly when you want to be trading. That is the highest probability price action. Because the thing is, when you came into trading, probably before you even came into the mentorship, you probably already knew an entry model, right? Because what's the first thing people do, and what we all do? The first thing we did when we got into trading was, how can we get in? How can we find an entry model? I want to know an entry model. Let me tell you, the entry model is the least of your concern. Where your concerns should be is finding the highest probability price action. That is what you want to be focusing on always. You're finding the highest probability price action. The entry model is easy. It's literally very simple. But finding the high probability price action, that is where people struggle, and that will be the difficult part. And that is exactly, of course, what we're all teaching here, getting to those high probability price action. And when we do find it, how can we execute on it, etc., etc., etc. All the steps that you need. So with candle signs, we mainly talk about disrespecting and respecting. And disrespecting and respecting is based on where are we closing, relatively seen to the body closure and relatively seen to the wick of the candle. So how long is the wick? That's your main question. How long is the wick? For example, if we look at the price action right here, and we go over order flow as well, right? Because we incorporate everything right here. We go over order flow, then order flow right here. This is our last line of defense, because this right there from to that high, that is our order flow leg higher, right? This is our order flow leg higher. When we come back into this order block right there, and this fair value gap are as well, let's mark them out. Right there and right there as well. The thing we are seeing, and what do you think we are doing right there? Based on candle signs, I can tell you that we are disrespecting. But again, what are the characteristics of disrespecting? First off, we study just the singular candles. So this candle and that candle. That is the two candles that we want to be studying. That first candle would be on a Friday. And once we see that Friday and we see it disrespecting that fair value gap like that, then we can already tell ourselves, this might want to continue lower. And the reason being for that, again, let's define the characteristics of disrespecting. Relatively seen, this candle close to that wick, how big is that wick? It's a very small wick, right? It's a very, very small wick. That is already the first indication that we are disrespecting order flow. Because we are disrespecting this fair value gap, we are closing below that fair value gap. Now, if we were to close below it, but we still had a long wick, then there still would be a chance that we do indeed continue higher. But this is the absolute definition of disrespecting. Closing below that fair value gap with a very small wick. If we were to close inside of the fair value gap with a very small wick as well, I would also see that as an early sign of disrespect. Respect is, again, what we will show examples of, but respect would be when we wick it and we have a very long wick and we close above the daily fair value gap. That's what you would want to see ideally. Then the second discount array in the form of that order block right there, we also have a huge disrespect candle right there. We are closing very low, and that close, relatively seen to the wick right there, is very low. It's not a long wick, right? So we disrespect what? From body, you take the bodies, you have 50% right there. That is your mean threshold. We are disrespecting mean threshold of that order block right there. Whenever we disrespect mean threshold of either a breaker or an order block, that is an early indication of potentially order flow failing, and of course that discount array or premium array failing as well. So this right here, closing low, closing below mean threshold, closing even below the whole mean threshold at all, below the zero level right there, closing below the fair value gap right there, having small wicks, that is candle science telling you that it's disrespecting those levels. Those are early signs of order flow getting invalidated. So order flow potentially failing. Those are the early signs. This is what you would not want to see, an aggressive move lower right there. It's not what you would want to see at all. So then, what is a sign of respect? Well, where is this move lower heading? Based on order flow, we need to have the time frames in context of one another, right? So daily needs to be in context of weekly, weekly needs to be in context of monthly. So if daily order flow is getting disrespected, what can it reach for on the time frames above it? Well, if we zoom out to the monthly, what are we seeing? We're having this fair value gap right there, and that monthly order block as well. Did I say, yeah, okay, that's for that fair value gap, perfect, yeah. Then, right here, what are we seeing? Look at that candle, that singular candle. Again, that candle already tells us what the lower time frame is doing. So we don't need to go into the lower time frame to see what is happening there. Because based on the lower time frame, we can already tell that this right here, this long wick, is displacing. So based on that ID that we are displacing right there, just based off the fact of this long wick and seeing where is the body closing, where are we closing right there, long wick relatively seen to the body, then the next candle is the easiest and most predictable candle that you can trade, especially if we have not taken out that target. Because based on order flow, what are we doing? We're moving from discount array to premium array right there. So once we have that first candle which respects these discount arrays, then the next candle is easily tradable. Because the next candle is very predictable. There's no other way that it can go. If we were disrespecting this and we were to close either in the fair value gap or beneath the fair value gap, then the next candle would be very predictable, because then the next candle would likely be lower. So that is how we work with respect and disrespect. Now, then we also have, based on candle science, we have consolidation, expansion, consolidation. This is aiming and this is talking about fair value gaps being created, which is also part of your candle science. A fair value gap being created is a 3-step process. So if we go into the daily time frame again, a fair value gap being created is of course 1, 2, 3 right there. That creates, of course, your fair value gap, which then, if we talk about consolidation, expansion, consolidation, usually what you're seeing when we do create a fair value gap, we have some kind of consolidation. Now, that first candle doesn't need to be consolidation, but it's important to understand that the middle candle is always an expansion. Always. You want to have a clear expansion. That is what you would want to see. The third candle is unpredictable. And the reason I say that is because, yes, it can continue higher, but there's a 50-50 chance of that candle also continuing lower or being consolidation because it's preparing the next candle to trade into that fair value gap. What you see once this fair value gap has been created, consolidation right here, and only once we trade back into the fair value gap, then eventually we continue higher right there. So that is very important to understand. What you're seeing here as well is on a weekly time frame that right here we have again 1, 2, 3. That third candle is tricky. It's 50-50 because this can expand higher, but ideally what you want to do is wait for that candle to close, and then you want to trade the next candle. And once this candle closes, that candle that trades into the fair value gap, we have clear respect right there. So the next candle is pretty predictable, right? That is exactly how you would go about that. So again, it is important to understand when we do disrespect mean threshold, that doesn't mean that order flow is now switching or anything. Or when we disrespect that fair value gap, it doesn't mean that order flow is now switching or bearish or whatever. But it's an early sign of order flow getting invalidated. So what that means is that if that was to happen, then that wouldn't be high probability to trade. So if there's another pair where that doesn't happen, or another instrument where that doesn't happen, and where we do respect those levels, that is higher probability to trade. So that is what you want to be focusing on, right? So then as well, when we refer to sweeping and we refer to respecting or disrespecting, that is exactly the same thought process, because what you're doing here, when we have this last line of defense, what we talked about yesterday as well, is when we do respect those lows, we want to see wicks, not body closures below those lows. Then when we do see wicks like this, it's perfect, because then we have an idea. Yes, this might indeed be a sweep, and we can continue higher, and this next candle does indeed continue higher. And again, we don't need to go into the lower time to see that it's sweeping, because we can already tell just by looking at the higher time frame candles alone. We can tell that these candles right there on the lower time frame are displacing. So then what do we see? We have consolidation, expansion, consolidation. Can you see that this third candle right there, that candle is unpredictable? Again, that is the 50-50 candle. That is not where you want to get involved. You want to get involved in the expansion, then wait this candle out, and then you want to get involved in the new discount array. For example, that fair value gap right there, that is ideally what you would want to do. And then if we follow price action a little bit more, we have this fair value gap right there. And what are we doing? We're respecting that. So the next candle is very predictable, because the next candle is likely to expand higher towards those targets right there. Then eventually we just continue order flow, continue the candle signs, and it happens over and over and over. And then it happens again and again and again, where we have the 1, 2, 3. That third candle is already preparing. What you'll see a lot of the times, the third candle is already preparing the next candle, so basically the fourth candle, to trade into the fair value gap, because price is already taking into account that future fair value gap. That's what you'll see a lot of the times. When we are creating a fair value gap, we have 1, 2, 3. That expansion phase creates the middle of the fair value gap. Then the third candle is not predictable, because that third candle will either expand higher, but that's 50-50, or it will consolidate, or it will trade lower, and based on candle signs, it will close very low, like we're seeing here as well. Based on candle signs, it will close very low right there, because the next candle is already preparing to trade into that. So this candle is sort of giving a helping hand to the next candle to trade into that and then expand higher off of that. So that is what you'll see a lot of times. Then you want to wait this candle out. So this can be a week, this can be a month, this can be a day, whatever it is. You want to wait for that candle, and you want to trade the next candle, and ideally the next candle and the candle after that, until we reach that target. That is how we would view that. So whenever I say that on a Thank God Friday setup, for example, based on candle science, I do think that this can play out. Then what I mean is that we usually have a very low close. For example, if we take a look at GBP Canadian dollar, I believe. Now, excuse me if this is not the right one, but we talked about this last week, that right here we have the weekly range. We have a clear weekly range. Now, that is not that relevant right now, but I just want you to pay attention to the candle signs. Right here, when we are moving lower, we are sweeping that previous week high and even Monday's high right there. And Tuesday is sweeping it. Why is it sweeping it? Based on candle signs, what is it doing? So wicking it, and we have a low close right there, right? So there's a huge wick to the upside, and we close with a down candle right there. So this is indeed a sweep. Indeed, we are seeing right there that this is a displacement on the lower time frame above that high. So right there, the next candle is already predictable. Now, the next candle is not a nice delivery right there, but we continue lower and we deliver into what? Into that daily fair value gap. And then Thursday, on a Thursday's close, you would look at the candle close based on candle signs to tell you if a Thank God It's Friday setup will happen. Because if this Thursday is a low close relatively seen to what? The wick right there. Compare this wick to this wick. This will not be a Thank God It's Friday setup that Wednesday. Obviously not, because obviously it's a Wednesday, but let's say if that was a Thursday, then it would not be a Thank God It's Friday setup because the wick is too long. Friday will take too long to go to that and then continue higher. So based on candle signs, this Thursday, the actual Thursday, is very clean right there because this sweep is very close for Friday to reach into and then have a counter trend move back into the weekly range. The same exact thing that you would see with your fair value gaps, what you would actually want to see. For example, same exact thing here. When we have 1, 2, 3, this candle, especially after reaching the target, is pretty unpredictable. And this candle is preparing what? Already trading lower because it's preparing the next day to trade into that fair value gap. It's giving a helping hand again to trade into that fair value gap, and then we continue higher. So that right there is candle signs. So based on what we are currently seeing, based on this sweep right here, and based on how we are treating this fair value gap right there, is this, first off, is that high respecting? And is this fair value gap getting disrespected? This fair value gap is getting currently disrespected, and this high is getting respected currently. So just purely on that candle, this is not as high probability to continue higher off of here. Again, there's still 4 hours to the close right there, so we can't say it for certain. You would look at once the next day opens, you would look what has the previous candle done. That is what you want to see. But for example, if we take a look at yesterday's candle right there, we can clearly see that it's very nice because this candle is preparing and it's a consolidation. We have this consolidation, expansion, doesn't really matter what it is. Expansion, that's important. And this candle is 50-50. So that candle you want to stay out of and you want to wait for this potential candle. And then once this candle respects as well, then of course it's a high probability to target new highs. And again, same here, weekly fair value gap right there, respect, and we continue higher right there. That is exactly what you would want to see. So we can answer the questions of what are early signs of order flow getting invalidated. Think about the fair value gaps getting disrespected, mean threshold getting disrespected. You would draw your mean threshold from body to the body right there. If there's 2 consecutive down candles, then you use both candles right there. There's a breaker, you just use if it's a bullish breaker, so for example, we have this bullish breaker, you would use the up candle right there, and a bearish breaker, you would use the down candle. Now, again, just because we disrespect one breaker right there doesn't mean that order flow is getting invalidated. It's an early sign. So the early sign meaning that if another pair is not giving that early sign, then the other pair is higher probability. Again, you're constantly finding the higher probability price action on instruments. That is your goal. It's not about finding the entry model, finding the entry pattern. No, it's constantly finding the highest probability price action. That's always your goal. Never forget that. So what is candle science? Candle science is studying the candles, the singular candles on the higher time frame. That's constantly what you are doing. Then define respect. Respect is when we are wicking it and we are not closing in or below it or above it, depending on if it's a premium or discount rate, of course. Discount rate, we would not want to close below it. Premium rate, we would not want to close above it. Define disrespect. Again, premium rate, if we are closing above it, then we are disrespecting. If we are closing below it for a discount rate, then we are also disrespecting. If it shows respect, what can we expect for the next candle? If we're showing respect to a discount array, then the next candle can likely expand higher. That is what you would expect. If it disrespects, what can we expect for the next candle? Well, if we are disrespecting a discount array, the next candle will likely also disrespect the discount array, so we will continue lower. So you would not expect higher prices anymore. Then, does disrespect mean that we instantly switch bias? That is also crucial for you to understand. No, that does not mean that we instantly switch bias. For example, we are disrespecting that fair value gap. If we were to close right there, I would classify that as a disrespect of the fair value gap. But that does not mean that I now start looking for shorts instantly. That's not, because my initial idea right there was that we were continuing higher. Just because it's disrespecting that daily fair value gap does not mean that I now switch my bias to shorts and I'm forcing shorts. No, I go over the same process, and again, that's something we will go over in the filtering process, etc., as well as later on in the higher time frame analyst week. Then you still look at other instruments to find the most high probability price action. That's always your goal. Again, taking shorts right there is also not high probability, because right there, price action is pretty 50-50. It's still more bullish than bearish. That's what you need to understand. But I would argue it's around 70% bullish, maybe 30% bearish. It's not high probability, because you want to have 100% towards one side of the market. That is what you want to be looking for. So no weird signs that we are potentially continuing lower. For example, the sweep that we are having there, the disrespect of that fair value gap, those are small little details, small little signs that we are potentially continuing lower instead of continuing higher. So that is not what you would want to see. That is not as high probability. So that is candle science for you. Again, throughout the week, we will also touch on it more. We will be putting it all together: market structure, order flow, and candle science. These are the main 3 topics that you are going to be working with. All right, perfect. Thank you.